Welcome, everyone. Once upon a time, in the vast and diverse landscapes of Latin America, a remarkable story unfolded during the 19th century. It was a story of discovery and the interplay between distant lands. Let us embark on this captivating journey and witness the extraordinary events that unfolded. Our first destination is Peru, a land renowned for its mineral treasures. In the 16th century, an astonishing silver deposit was uncovered in Potosi, Bolivia, which was part of the viceroyalty of Peru at that time. The news of this colossal find reverberated across the region, leading to a silver rush of unprecedented magnitude. Thousands of miners flocked to Potosi, driven by the allure of fortune and adventure. Investors from far and wide recognized the incredible potential and poured their resources into this burgeoning industry. But the wealth of Peru extended beyond silver, as it held vast reserves of copper, gold, lead, and zinc, further fueling its rise as a mineral rich paradise. Meanwhile, in the sprawling lands of Mexico, another extraordinary chapter was unfolding. In the 16th century, intrepid explorers stumbled upon the legendary silver deposits of Zacatecas. The news of these discoveries spread like wildfire, and soon the hills and valleys of Mexico became a hotbed of mining activity. The shimmering veins of silver attracted a multitude of miners and entrepreneurs, creating a frenzy of excitement and opportunity. Cities such as Guanajuato and Texcoco emerged as thriving mining centers, their prosperity intricately linked to the precious silver that lay beneath the earth. And Mexico's mineral wealth did not end with silver alone. The land boasted substantial reserves of copper, gold, lead, zinc, and an array of other precious minerals, transforming it into a true treasure trove. As we journey further south, we arrive in Chile, a land blessed with extensive copper reserves. In the mid 19th century, the discovery of rich copper deposits in the northern part of the country ignited a revolution in the mining industry. Large scale copper mining operations were established, laying the foundation for Chile's remarkable economic growth. The country soon emerged as one of the world's leading copper producers, harnessing its abundant resources to shape its destiny. Next, we venture to Brazil, a nation teeming with diverse mineral wealth. In the 18th and 19th centuries, the discovery of gold and diamond in the region of Minas Gerais sparked a feverish gold rush. Miners and investors flocked to Brazil, transforming the landscape and leaving an indelible mark on its history. The gold rush not only brought immense wealth but also shaped the economic fabric of the country. Additionally, Brazil's iron ore reserves emerged as a vital component of its mining industry, cementing its position as a key player in the global market. Our final stop takes us to Argentina, a land rich in natural resources. The 19th century witnessed significant mineral discoveries in Argentina, particularly in the realm of silver. Regions like Catamarca, San Juan, and Jujuy became synonymous with silver mines that attracted substantial investment and ignited a flurry of mining activities. Argentina's mineral wealth extended beyond silver, encompassing copper, gold, lead, zinc, and even lithium. As these extraordinary events unfolded across Latin America, London, the bustling financial hub of the world, became intimately connected to the mineral discoveries in the region. Investors from across Europe and America flocked to London, seeking to capitalize on the vast potential of these newfound resources. The city's financial institutions became the epicenter of capital raising and investment for mining ventures in Latin America, attracting wealthy individuals, merchant banks, and financial institutions. These London based financial institutions played a vital role in providing essential services to support the mining and resource sectors in Latin America. Banks, investment firms, and insurance companies offered loans, investment advice, insurance coverage, and other financial services to facilitate the operations and growth of mining companies in the region. They also provided risk management services, evaluating the viability of mining projects, assessing political and economic risks, and offering market information and analysis to guide investment decisions. To exploit the mineral wealth of Latin America, mining companies were established, many of them based in London. One such example is the Peruvian Mining Company. They raised capital by offering shares to the public on the London Stock Exchange, attracting investment from individuals and institutional investors. London also became a crucial center for the trading and exchange of Latin American commodities, including minerals. The London Metal Exchange, a commodities market, facilitated the trading of metals like silver, copper, and gold. These enabled the export of Latin American minerals to global markets, with London serving as a key intermediary and trading hub. London also became a crucial center for the trading and exchange of Latin American commodities, including minerals. The London Metal Exchange, a commodities market, facilitated the trading of metals like silver, copper, and gold. These enabled the export of Latin American minerals to global markets, with London serving as a key intermediary and trading hub. The discovery of these vast resources in Latin America sparked excitement and optimism among investors in London, shaping investor sentiment and fueling speculation in the market. The flow of capital and investments from Latin American ventures had a tangible impact on London's economy. It fueled the growth of financial services, increased trade activity, and stimulated related industries such as shipping, insurance, and legal services, solidifying London's reputation as a global financial center. However, this interconnectedness between the resource discoveries and London's financial ecosystem also brought about significant consequences. It played a pivotal role in the events leading to the Panic of 1825. In the early 1820s, there was a surge of speculative investment in Latin American mining ventures. Investors were attracted by the promise of vast mineral resources and the potential for high profits. Speculators, including wealthy individuals and financial institutions, eagerly invested in mining companies, infrastructure projects, and government bonds issued by the Latin American countries. The high demand for mining shares and other investment led to the overvaluation and inflated prices. Speculators drove up the prices of stocks and bonds, creating a speculative bubble. Many investments were trading at prices far beyond their intrinsic value, fueled by optimistic expectation and the belief that the mining boom would continue indefinitely. By 1824, signs of trouble began to emerge. Some mining companies experienced financial difficulties, struggling with high costs, low grade ore deposits, and inefficient operations. Additionally, the decline in commodity prices, particularly silver, started to impact the profitability of mining ventures. These early warning signs hinted at the unsustainable nature of the investment craze. Commodity prices, especially silver, experienced a sharp decline due to various factors such as oversupply and changing market dynamics. The drop in prices eroded the profitability of mining ventures and raised concerns about the sustainability of the industry. As commodity prices continued to fall, investor sentiment started to soar. The failure and bankruptcies of prominent mining companies added to the growing concerns. Some mining ventures were unable to meet their financial obligations, succumbing to mounting debts and operational challenges. News of these failures spread quickly, eroding investor confidence and triggering a sense of panic. As investor confidence waned and negative news spread, panic selling commenced. Investors rushed to sell their holdings, fearing further losses and wanting to secure their capital. Panic selling led to a sharp decline in stock prices across various sectors, including mining shares, exacerbating the overall market downturn. The panic selling in London had a contagion effect, spreading to other financial centers and markets. Investors globally became cautious about investment related to Latin American mining ventures, leading to a broader market decline. The panic spread beyond London, impacting other European financial centers and causing a ripple effect in Latin American economies. The panic in London resulted in widespread financial distress. Banks and financial institutions faced liquidity shortages as investors demanded the conversion of their investments into cash. Some banks were unable to meet the withdrawal demands, leading to bank failures and further exacerbating the crisis. The panic and subsequent market crash had severe economic consequences. The decline in stock prices, bank failures, and reduced investment activity contributed to an economic contraction. The recessionary conditions resulted in rising unemployment, business closures, and a decline in economic output. The chain of events leading to the panic in London in 1825 can be summarized as a combination of speculative investment, overvaluation, declining commodity prices, bankruptcies, panic selling, contagion effect, bank failures, and economic contraction. The bursting of speculative bubble and realization of the unsustainable nature of the investments played a crucial role in triggering the panic and its far-reaching consequences. As we conclude this journey through the tumultuous events of the London Panic of 1825, it is essential to reflect on the lessons learned and the common thread that weaves these stories together. Throughout history, we have witnessed numerous instances of asset bubbles and speculative frenzies that have ultimately led to devastating consequences. From the South Sea bubble in the 18th century to the dot-com bubble of the 1990s, the allure of quick profits and irresistible temptation to ride the wave of success have often clouded judgment. What is strikingly common in these stories is the human element. It is the vulnerability of individuals, the eagerness to embrace opportunity, and the collective psychology that drives these asset bubbles to their breaking point. Greed and speculation become intertwined, blinding people to the risks and fueling the flames of irrational exuberance. But amidst the tales of financial ruin and shattered dreams, there lies a powerful reminder. It is a reminder that while history may repeat itself, so too does our capacity to learn and grow. Each bubble, each panic serves as a sobering reminder that wealth built on shaky foundations can crumble, and that the pursuit of sustainable prosperity demands caution, prudence, and a long term perspective. So, as we explore the stories of asset bubbles, past and present, let us pause and ask ourselves, how many such stories have we witnessed, and what is the one thing they have in common? It is the reminder that in our quest for success, we must temper ambition with wisdom and never lose sight of the fundamental principles that underpin sound financial practices. May the lessons of history guide us, and may we navigate the treacherous waters of speculation with a steady hand and a clear vision. For it is in our collective awareness and thoughtful decision making that we can build a future where the pitfalls of asset bubbles become relics of the past. The stories of the past are not simply tales of the woe, but valuable chapters in our shared human experience. Let us learn from them and together forge a path toward a more stable and resilient financial future. Thank you for joining on this captivating journey through the London Panic of 1825 and the lessons it holds. May our exploration of history continue to engage and enlighten us as we navigate the complexities of the modern financial landscape. Thank you, everyone.